Welcome to the Deep Dive. We're here to unpack those often complex financial reports and, well, reveal the real story underneath. Today, we're digging into Oberoi Realty Limited's latest numbers, specifically for the first quarter of the fiscal year 2025-2026. So that's Q1 FY26. Our mission really is to cut through all the jargon, the press releases, the big presentations, and just pull out the key insights for you. Think of it as your shortcut, a way to grasp what's actually significant. Quarterly reports, they can look pretty dense, a bit of a maze sometimes, but buried in there are crucial clues about a company's health and, well, where it might be heading.
Exactly. And we want to go beyond just the headline figures. We're aiming to understand the why behind them, connect the dots between Oberoi Realty's performance and what's happening in the broader Indian real estate scene, what it all really means.
Okay, let's jump right in then. The big picture first. Looking at Oberoi Realty's Q1 FY26 consolidated results, what were the immediate takeaways, those top-line numbers?
Right. So for Q1 FY26, the consolidated revenue came in at 1,073.98 crore rupees. Let's call it just over 1,070 crore. Their profit before tax, PBT, was 506.96 crore, so just over 500 crore. And profit after tax, the net profit or PAT, landed at 421 crore rupees. Their operational profit measure, EBITDA, that was a pretty healthy 606.77 crore rupees. So yeah, substantial figures.
Those numbers give us a snapshot, definitely. But you mentioned context is key. How do these figures actually compare to, say, the last quarter or this time last year?
That's where it gets interesting. This Q1 revenue, the 1,073.98 crore, it's actually lower than the previous quarter, Q4 FY25, which is 1,213.33 crore. And it's also quite a bit lower than Q1 of the previous year, FY25, which stood at 1,405.16 crore. We see a similar pattern with profits too. PBT is down from 577.1 crore last quarter. PAT, the 421 crore, is a slight dip from 432.50 crore in Q4. And EBITDA also decreased from Q4's 681.26 crore.
Okay, so a dip across the board compared to both the last quarter and last year. How should we read that? Is it, a warning sign, or is there something specific to real estate we need to consider?
Yeah, that's exactly it. You really need to understand the nature of their real estate business here. It's not like, say, selling widgets every quarter. Revenue recognition in real estate is often tied to project completion or specific milestones. So you get these peaks and troughs. It can be quite lumpy. A dip compared to the last quarter doesn't automatically signal a slowdown. It often just reflects the timing of their project handovers. We see this echoed in the diluted earnings per share too. It was 11 rupees 59 paise for Q1 FY26. That's down a bit from 11.91 in Q4 FY25 and more noticeably from 16.08 in Q1 FY25. Again, showing that quarterly fluctuation.
Right, that makes sense. Project cycles. So let's drill down then. Oberoi isn't just one thing, right? They operate across different segments. How did those core areas perform? Let's start with real estate development properties. This is the billing and selling part. Yeah, their core business, arguably.
Absolutely. This is key. The residential projects are major drivers. For Q1 FY26, this segment brought in revenue from projects of 63,320 lakh. That's 633.2 crore rupees. Remember, a lakh is 100,000.
Got it. 633 crore from development. Now, the press release made a point of mentioning a successful tower launch at Elysian. What can you tell us about that? What does it signal?
Elysian. Yes, that was a highlight. They started bookings for a new tower, Tower D, and in Q1 alone, they booked, get this, 2,040,025 square feet. That's 98 units. And the gross booking value for that was over 1,124 crore rupees, just from that one tower launch in one quarter.
Wow, that's significant booking value.
It is. And what's really telling is the price point. The average rate per square foot for Elysian jumped to 46,856 rupees this quarter. That's up from about 44,600 last quarter and around 39,700 this time last year.
Okay, so not just selling volume, but getting higher prices too. That suggests pretty strong demand at the premium end.
Exactly. It shows real pricing power and confirms that, yes, the demand for high-end luxury residential properties in their markets is robust. Oberoi seems to be capitalizing on its branded locations effectively. And it wasn't just Elysian. Other projects like Jardin, Forestville, Eternia, Enigma, Sky City, they all contributed decent booking numbers too, and even one unit at 360 West.
Okay, so the development side looks strong, especially at the higher end. What about the other side of the coin? Their investment properties, the assets they hold for rent, that's more about stable, recurring income, right?
Precisely. This segment includes their office buildings, retail malls, and the hotel, and it provides that steady baseline. Overall, the total operating revenue from investment properties in Q1 was just over 264 crore rupees. And the standout figure here is the EBITDA margin, an incredible 92%, with overall occupancy at 81%.
92% EBITDA margin, that's That's exceptionally high for rental properties, isn't it?
It really is. It speaks volumes about how efficiently they manage these assets and the desirability of their commercial spaces. Very strong operational control. If you break it down further, the office spaces, Commerce of Thirds 2 and 3, they all maintain high margins, like 88 to 93%, and strong occupancies, mostly 83 to 96%. Commerce the Third particularly showed fantastic growth year over year. Leased area way up. Operating revenue nearly doubled from about 66 crore to 123 crore compared to Q1 last year.
Impressive growth there. And retail, Oberoi Mall is usually a strong performer.
Still is. Oberoi Mall is running at 99% occupancy, almost full, and a 96% EBITDA margin. Just a cash cow, really. Their newer Sky City Mall, which just started reporting, is at 50% occupancy in its first quarter, with a very respectable 89% EBITDA margin already. So a good start there.
And hospitality, the Westin.
The Westin Mumbai Garden City also performed well. Operating revenue was about 42.6 crore rupees, EBITDA margin at 38%, which is decent for hospitality. Occupancy was 72%, and the average room rate, the ARR, was quite strong at nearly 15,000 rupees. So solid performance across the board at investment properties.
Okay, so operations look generally robust, both in development and rentals, despite the headline dip. Let's talk about the financial foundation, the balance sheet. How healthy is the company financially? What's their cash situation?
Debt. Their financial health looks very solid. They have a strong cash position. The closing cash and bank balance, and this includes their short-term liquid investments, was around 2,950 crore rupees at the end of Q1. That's a significant buffer.
Right, and I saw they raise money through non-convertible debentures, NCDs. Can you unpack that a bit? What are NCDs and what's happening with those funds?
Good question. So non-convertible debentures, or NCDs, are basically bonds. It's a way for the company to borrow money from the market for a fixed term at a fixed interest rate. Non-convertible just means the lenders don't get the option to convert this debt into shares later on. They raised 1,500 crore rupees through these back in October 2024. As of Q1 end, about 763 crore of that amount was still unutilized. Importantly, they've stated this money is temporarily parked in mutual funds, and they haven't deviated from why they raised the money in the first place. And they're maintaining a strong security cover on these NCDs, at least 1.5 times, meaning the assets backing the loan are worth at least 1.5 times the loan amount. That gives lenders comfort.
So they have cash, and they've managed their borrowing well. What about their overall debt level relative to their equity?
Very healthy there, too. Their debt-to-equity ratio was only 0.19 at the end of Q1. That's actually slightly better than the 0.21 in Q4. For a real estate company, which often uses debt for big projects, 0.19 is very conservative. It shows financial discipline and gives them plenty of room to borrow more if needed for future growth without being over-leveraged. Oh, and their current ratio, another liquidity measure, is also quite strong at 4.06.
Okay, strong financials. Were there any other significant strategic moves, like changes in investments or corporate structure?
Yes, there was one notable transaction concerning an associate company, Oberoi Realty Ltd. An external investor put in 12,250 crore rupees for a 21.74% stake in Oberoi. This diluted Oberoi Realty's holding down from 50% to about 39%. So they cashed out part of their stake, potentially freeing up capital while still keeping significant influence.
Interesting. Any other corporate actions? Dividends?
Yes, good news for shareholders. They declared an interim dividend of 2 rupees per share for this fiscal year. That's 20% of the face value. Also a bit of housekeeping, they struck off 2 smaller subsidiaries, Astur Realty LLP and Site Realty Private Limited. Probably just simplifying the structure.
And ownership. Did the promoters or big institutions change their holdings much?
Not really. The promoter and promoter group holding remained very stable at 67.70%. There were just minor shifts in holdings by foreign institutional investors, FIIs, and domestic institutional investors, DIIs. Overall suggests stability and confidence from major shareholders.
So putting it all together, the results, the financial health, the strategic moves, what's the view from the top? What did the chairman and MD, Mr. Vikas Oberoi, say about the outlook?
His commentary was quite positive, actually. He highlighted the resilience of the Indian economy, talked about strong fundamentals, a growing aspirational population, good domestic demand, and India being well-positioned for growth globally. Pretty upbeat assessment of the macro environment. And he directly linked this to their business, stating, and I quote loosely here, that demand for luxury homes remains strong, fueled by rising aspirations and a growing desire for an enhanced lifestyle.
Right, which ties back neatly to that Elysian performance we discussed.
Exactly. It connects the macro picture to their specific segment of success.
So given that positive view, what's their plan to keep the momentum going? What's the strategy?
The focus, according to Mr. Oberoi, is very much on creating these integrated developments. Places that foster vibrant communities was the term used. So not just building houses, but creating a whole ecosystem with well-designed homes, premium retail, hotels, and focusing on sustainable living. That integrated approach is key to their strategy. They're also planning new project launches through the rest of the year and actively looking for good land deals to keep their pipeline full for the future.
Makes sense. Building communities, not just buildings. Now, it's not all about the balance sheet and profit margins, is it? Company reputation, culture, that tells a story too. Did Oberoi pick up any awards or recognition this quarter?
They certainly did. It seems it was a good quarter for accolades as well, which does paint a broader picture. They were recognized by the Great Place to Working Institute as one of India's best companies to work for 2025. They ranked 74th in the top 100. And more specifically, they were named one of India's best workplaces in the real estate industry for 2025. So strong on the employee front.
That's significant recognition. What else?
Their Heavenly Spa at the Westin Mumbai Garden City was named one of the top 10 hotel spas at an industry awards event. Oberoi Mall won for a marketing campaign, Holiday You'll Love, and was also named Most Admired Green Shopping Center of the Year.
Green Shopping Center. Interesting.
Yes, sustainability focus there.
Yeah.
And finally, the new Sky City Mall actually won the Best Construction Project Award at the CIDC Vishwakarma Awards.
Yeah.
So, yeah, recognition across workplace culture, hospitality, retail marketing, sustainability, and even construction quality. It rounds out the picture nicely. So as we were to wrap this up, Oberoi Realty's Q1 FY26 shows, despite those headline dips in consolidated profit and revenue compared to prior periods, the underlying operations look really quite strong. We saw that in the residential development, especially with Elysian's success and pricing power, and also in the investment properties, which are performing very consistently with those, frankly, remarkable EBITDA margins. Financially, they're sitting comfortably with good liquidity and low debt.
Yeah.
And they have a clear strategic focus on creating these large, integrated community developments.
Yeah, this deep dive really shows how looking beyond just those initial consolidated numbers gives you a much richer understanding. You see the different parts moving, the strategy playing out. It's a great example, really.
And thinking about that strategy, their strong position across different real estate types, residential, office, retail, hospitality, and this explicit focus on creating vibrant communities. It makes you wonder, doesn't it? What kind of long-term impact will these large-scale, mixed-use developments actually have on India's cities, on the urban landscape, and maybe even on how people aspire to live in the future?
That is a really interesting question to leave us with, something for you, the listener, to perhaps think about the broader implications of these corporate strategies on urban development and lifestyle trends, especially in a dynamic economy like India's, how companies like Oberoi are quite literally shaping the places we might live and work tomorrow.